G'day guys, welcome back to the Devon Too Good Investing channel. In this video today, we're going to be discussing Micron's fourth quarter earnings that came out about a week ago. And we're also going to touch on sort of what we can expect moving forward because we are sort of moving into a down cycle for DRAM and NAND. So I think it's very important to just have a look at our thesis again and sort of discuss what to expect moving forward. So guys, without further ado, let's just get right into these earnings. So we got revenue of 6.64 billion versus 8.64 billion for the prior quarter, and then compared to 8.27 billion for the same period last year. So, you're looking at about, a 20 to 25% decrease here in revenue compared to last year and as well as the previous quarter. In terms of GAAP net income, you can see that, despite the challenges right now, they've remained profitable in the fourth quarter, banging out an EPS of, $1.35 per diluted share. You can see non-GAAP income, it's, slightly higher as expected. And then operating cash flow, 3.78 billion versus 3.84 billion for the prior quarter and 3.88 billion for the same period last year. So in terms of, cash flow, you could call it flat. Now, in terms of 2022, this is sort of the amusing part. 2022 as a whole has been an excellent year for Micron. If you just ignore this final, last quarter here, it's been pretty much a record year. Revenue of 30.76 billion versus 27.71 billion for the prior year. And you can see, this EPS here, $7.75. And you think of them, per share price at the moment, and it's trading at, 50 pretty much. But I want to read this little bit of commentary we get here. So in fiscal 2022, Micron generated record revenue of 30.8 billion and delivered our sixth consecutive year of positive free cash flow, allowing us to return a record $2.9 billion to our shareholders, said Micron CEO. Our technology and manufacturing leadership in both DRAM and NAND, deep customer relationships, diverse product portfolio, and strong balance sheet put Micron on solid footing to navigate the weakened near-term supply-demand environment. We are taking decisive steps to reduce our supply growth, including a nearly 50% wafer fab equipment capex cut versus the last year. And we expect to emerge from this down cycle well positioned to capitalize on the long-term demand for memory and storage. So I think the key takeaway here is that we are facing near-term supply-demand challenges, and by the fact that we're cutting supply growth by nearly 50% means that the market is currently oversupplied. And if you actually listen to the earnings call, they talk about how the inventory days in Q1 of next year is going to approach about 150, which is extremely high. Usually they like to have the inventory days at about 100. So as a result of this, they're looking to reduce supply in order to bring the supply-demand balance back into order, and then they can continue with growth from the increasing demand in NAND and DRAM. And you can already see this take an impact on the gross margin here. You can see that just in the previous quarter, they had gross margins of 46.7%, and it's fallen all the way down to 39.5%. And we'll get into this more in a second on why this has occurred, but the main reason is due to the average selling price of DRAM and NAND. DRAM and NAND are commodities, and they are subject to price swings governed by the market depending on demand and supply. And as we spoke about, at the moment, the market's oversupplied. Therefore, the price of these commodities is going down, and that is decreasing the gross margin. And if we keep just scrolling down here, they give us a business outlook, and we can see that it's pretty rough, right? It's pretty bad. So gap revenue, we're looking at 4.25 billion plus or minus 250 million. Gross margin of 25% plus or minus 2%. We can see the expenses here, and we might get a loss on a gap outlook for earnings per share, which at the end of the day, the supply, there's way too much supply. They've got to bring the supply back in line. As a result, they're not going to be making many new sales, which will contribute to revenue. But once the supply demand sort of equation gets back in line, we should expect Micron to get back into some sort of growth. So let's touch on the end markets. So Micron has 3 main end markets in their business. The first one being data center, the second one being PC and graphics, and the third one being mobile and intelligent edge. So let's start with data center. So data center revenue fell quarter over quarter and year over year, as we discussed before, primarily due to declines in average selling price, ASP. However, in the financial year 2022, we set a new record for cloud, which grew more than 30% year over year, and this is mainly driven by secular growth in AI and the digital economy. However, I think we should be careful here moving forward with data center and cloud. I think it will be an area that over the long term grows very well. However, if we see these big companies such as Amazon, Microsoft, Google, for example, if they start cutting capex, that's going to directly affect Micron and their sales. So we need to keep that in mind. And I think, obviously, if there's a slowdown here, which there already is a slowdown, I do expect it to be short term and macro related. However, I think the fundamentals here in terms of cloud data centers and the growth in that area, I do think it's going to be strong moving out over the next 5 to 10 years. If we talk about PC and graphics, so PC client revenue fell quarter over quarter and year over year, driven by lower PC end demand, unit end demand, and customers reducing inventory. So if customers are trying to reduce inventory, that means they're not ordering more memory from Micron. And also if demand is slowing, then they're gonna be turning over less inventory as well. So I do expect PC to be one of the more challenging parts of the business moving forward. I do think it's going to grow the slowest out of their 3 categories here. In terms of graphics, it fell quarter over quarter and year over year. And I think graphics, they're going to run into similar problems here as PC, though I don't think it's going to be quite as bad. Now, in terms of mobile and intelligent edge, mobile also fell quarter over quarter and year over year. However, they achieved 2 consecutive years of record mobile revenue in FY21 and FY22. A lot of this is driven by the push forward into 5G. 5G phones use 50% more DRAM than 4G phones. And in fiscal Q4, the 1 alpha comprised over 70% of the LP DRAM mobile bit shipments, and 176 layer made up approximately 95% of our mobile NAND bit shipments. So they got the latest technology being sourced into their into the latest phones. And then also the auto. This is probably another big growth factor for Micron. They delivered another record quarter, and the auto revenues were up 30% year over year. And then in terms of industrials, Well, it fell quarter over quarter and year over year on soft macro and long. But however, the long-term outlook remains strong. This is very similar to the data center where the long-term outlook is strong. However, companies are starting to cut back on capex. A lot of the automation that's going into the factories, companies are thinking twice about spending capex on that at the moment just due to the soft macro environment that we're facing. So in terms of the industry outlook for the rest of the calendar year, we're expecting industry bit demand growth for DRAM to be in the low to mid single digit range for the year, and NAND to be slightly higher than 10%. This is mainly due to the confluence of macro events and customer inventory adjustments, which are depressing demand for DRAM and NAND, as well as below-end consumption and the extremely aggressive pricing environment. Expect supply growth to be significantly above the demand growth in calendar year 22, contributing to very high supply inventories for both DRAM and NAND. So going into the start of 2023, Micron will be looking to unwind some of these, a lot of the inventory in order to bring those supply-demand dynamics back into balance. So for calendar year 2023, we expect demand growth to be closer to the long-term growth rate of both DRAM and NAND. In calendar year 23, we expect industry DRAM supply to grow well below demand growth. So if supply is growing slower than demand, then obviously the supply-demand balance is going to be more healthy, and the average selling price of both commodities should be more healthy as well. We are modeling a mid-single-digit percentage growth in DRAM industry supply in 2023. NAND supply growth in calendar year 2023 is also expected to fall below demand growth. Expect long-term DRAM bit growth to be in the mid-teens percentage, slightly lower than our prior expectation of mid to high teens due to moderation in expectation of long-term PC unit sales trends. So pretty much what they're saying is they're reducing their long-term outlook for DRAM bit growth from mid to high teens to mid-teens due to expected weakness in the PC market, looking out into the future. They continue to expect NAND market, which benefits from elasticity, to grow at around 28% per year over the long term. So in terms of what directly caused the revenue to drop 23% quarter over quarter, this is mainly attributed to demand bit shipments decreasing, roughly 10% quarter over quarter, and then ASPs declining in the low teens percentage quarter over quarter. And then for NAND, we can see that the revenue dropped 26% quarter over quarter, and this is due to bit shipments declining in the low 20% range quarter over quarter, as well as the ASPs declining mid to high single digits. So if you add those two up, you get about 26% down quarter over quarter. So the question is, do these short-term factors affect my long-term thesis for Micron? And for some people it might, but for me, it doesn't affect my long-term thesis, as I do think that these issues will be short-term issues and shouldn't affect Micron's business moving out 5-10 years. Micron has a lot of tailwinds in their business going out over the next decade, including all the growth that's going to come from cloud, all the growth that's going to come from the auto industry, the transition from 4G mobile phones to 5G, automation in factories. I think all these factors provide pretty strong tailwinds for Micron moving forward. Obviously, in the short term here, they're facing some pretty bad supply-demand challenges, mainly due to them oversupplying the market and also at the same time demand all of a sudden dropping off a cliff. So obviously for the rest of the year, the market's going to be oversupplied. However, they are taking actions at the moment to reduce their supply, where they're cutting the capex there by 50%. So this should help moderate supply and reduce inventory out in their end markets, which should also stabilize average selling price and normalize those gross margins. Obviously, it's going to be rough next quarter. It'll probably be rough in Q1 of next year as well. And it might still be rough in Q2, but certainly going out into the back half of calendar year 2023, I do anticipate these supply-demand challenges easing, and then we should be able to get back to sort of the long-term growth rates of 15% per year for DRAM and then the 28% per year for NAND sort of moving forward. So guys, that's my thoughts on the latest quarter and also the outlook moving forward. It's pretty tough, not going to lie. But obviously, Micron operates in a very cyclical industry where things can change very quickly. And you just got to be aware of that if you're interested in Micron. So guys, thanks for watching. Make sure you like, make sure you subscribe, and I'll catch you in the next one.